Hello. So in this video, we are going to be looking at the second part, which is Introduction to Financial Analysis using Excel. So as you all know, we are welcome, and let's get started. So to start with, um, we are going to actually be digesting financial ratio analysis for today, and some of those other analysis such as scenario analysis and variance analysis. We can also take a look at the growth analysis in Excel. So to start with, the objective for this video today is that we are going to introduce everyone to financial ratio analysis and how to read and interpret financial information from a company's financial statement. So this video is a very comprehensive video that include how we can read financial statements and how we can also upload that on Excel directly to avoid hard coding of those data. To start with, introduction to financial statements. We all know what financial statements means, and the three major financial statements that we have include the income statement, balance sheet, cash flow statement. So these three statements, we are going to look at them in details. So here I open the financial statement that we're going to be using, and this is from Apple Incorporation. It's a company we all know. So based on this statement, we have the data from 2023 and the data from 2022 likewise. So we are going to be digesting this financial statement and see some of those components that it entails. For the first part, we are looking actually at the income statement that comprise of the net sales, the cost of sales. Then we also have the operating expenses and operating income. Then we also have provision for tax and the net income at the end. That is the end income after we've eliminate other expenses that are attributable to our profit. So we also have the earning per share here, which we have the basic and the diluted earning per share for each year. This first value here is for the year 2023, and the next is for year 2022 as we have it here. So the next that we are going to be looking at, though this information here we don't actually need them in our analysis for now, since we are not actually doing analysis or projection based on where those earning comes from. So here we have the categorization of where the earnings come from, which we have American, the Europe, Greater China, Japan, and rest of Asia Pacific. That is not what we are going to be focusing on. And also it also elaborates here that Apple actually deals with iPhone, Mac, iPad, wearables, home and accessories services. So we are actually going to be looking at the statement of financial position next, which is also known as the balance sheet. um, you should know that this is a condensed financial statement that we are working with right now, and this financial statement comprise of the the current assets. Then we also have the non-current assets here. Likewise, we have the current liabilities, and we also have the non-current liabilities here. Then the last value which we are going to be using is the shareholders equity, which comprise of the last component in our statement of financial position. The essence of statement of financial position is to give us the position of a firm at a particular point in time, which we are going to be looking at data from 2023 and data from 2022 respectively. So here we have the current assets and all of those items that are under current assets. As you should know, not all of these data that are going to be required when we are going to be preparing our ratio analysis. That's why we need what is called the KPI, which refers to the key performance index. So after analyzing this financial statement, we should now look at the last statement which we have here, which is known as the cash flow statement. The cash flow statement actually have the data of both cash inflow and outflow over the period. and it's categorized into three aspects. We have the cash flow from operating activity, likewise we have the cash flow from investing activity, likewise we have the cash flow from financing activities. So this cash flow statement is going to be used to obtain data and on how the cash has been moving in an organization over the period of time. So after analyzing or digesting those components that we have in our financial statement, we can now go into analysis of this financial statement and how we can load them into our Excel worksheet. To work with financial ratio analysis in our workbook, we have to open a new workbook which we can get from here in this manner. To do that, we are going to open a new workbook which I have actually opened here right now. Then we are going to name our workbook at first. So to name this workbook, I would like to name it what we call online tutorial. Then I would like to save it in my documents folder here. So I save the file and now the name of the file change here. So to start with, what I will do is to go to the data tab where I can actually upload my data from. Then as I see here, I see some various options from text or CSV file. Likewise I see from the web, and also I can see from table range, but I don't need all of this. The option that I'm trying to work with is to load from a file, which the file is going to be a PDF file because I already have it downloaded on my operating system. So to do that, I click on load from file and a dialog for file will respond, which I will be able to select the file that I want to work with. After this dialog appear, now you can now select the data that you actually want to load, which is obtained from the PDF file that we already download. I have it in my folder set 3 here, and this is the file here. It says the financial statements for this company, and the name of the company is Apple. So I import this into my Excel worksheet. This pane appear up, and as we can see, we have some of this preloaded data in our Excel. So we have data here which contained in table 1, and it says it is obtained from page 1. So this data here, as we can remember, in our page 1 of the PDF that we just read out, we have the income statement. So this comprises of the data in our income statement, and as you can see, we have the value for total net sales. Likewise we have for cost of sales, and we also have total cost of sales data. We have the gross margin and operating expenses. So this table actually contains all of those data that we have in our income statement. So let's look at what we have in table 2 here. It contains all of those assets in our statement of financial position. We can confirm this by going back to our statement of financial statements. As you can see here, we have the total net sales to be 119,000. So now let's go back to what we have here preloaded in our data. Let's see if it corresponds. So here we have total net sales 119,000. So fortunately for us, everything corresponds, and we are able to obtain those information that we have in our statement of income statement of financial position from Apple for that year. And but what you can see here, we have what we call column 3, column 2, column 4. Likewise we have what we also call column 5, but these are not what we actually need, because column 3 represent data in year 2023, where likewise column 5 represent data in year 2022. Let's check and confirm for that. So let's check for the value of our net sales. We are already confirmed for this, which is 119,000. Then the other one, which is 117,000. So let's check and see which is actually correct here. So that is how we can import data from PDF. So we look at this and we see all of this as our assets. We have our total other current asset, total current asset. Then we have non-current asset and the total asset value here. Likewise, column 3 represents data from year 2023, and column 5 represents data from year 2025. So let's see what we have in table 3. Table 3 comprises of data from our financial statements, which we have our current liabilities and total liabilities. So the next we can looking at table 4 here. Once it's loaded, we are actually all of those various information from our equity, where we have the shareholders equity and the total liability and shareholders equity here. And as we have it also, column 3 represent data from 2023, likewise column 5 represent data from year 2022. So let's see what we have in our table 5. Here we have everything concerning our cash flow statements, and in this analysis for today's class we are not going to be looking at cash flow analysis. So basically all the informations that we require are in table 1, 2, 3 and 4, where table 1 contain what we have in our income statement, and table 2 contain what all our total assets, table 3 contain our total liability, likewise table 4 contain the equity. So what we'll just do is to select multiple, because we need 4 of these tables. Then I select these tables. Then what I want to do, I want to edit this before I import it into my Excel worksheet. To do that, I click on transform data here, then a dialog appear. So since this is preloaded, what we can just do is to edit some of those column. This column entirely I don't need it, because it hold the null value. So what I'll just do is manage column, then I say remove column, and that column goes away. But this I want to rename it, and the name of that column is actually year 2023. Likewise for this other table, for this other column, I don't need it, I have to remove it. So I say manage column, remove, and this I rename, which is year 2022. So for this I am done, because these are all the data that I need. But I can also do something so that my data in each worksheet will represent what they hold. So instead of table 1, I can call it the income statement. So I can say the income statement, which is holding data from year 2023 slash year 2022. So the same thing will be done on all of these table that we have here. If I should look at this, and I will do the same just like I did for the previous data. For the purpose of this video, I will skip all of these parts and speed it up so that we can actually get into importing those data. I would like to project for the last part here. This one is holding the value of our shareholders equity. So let's do that again. Column 2, that is holding null value, I remove the column because I don't need it at all in my work. Then likewise this column, I don't need it, so I remove it. Then this I have to rename it to 2023. Likewise I have to rename this also to 2022. So I hit enter, but I'm not done yet. I have to rename this also, since it is holding value of our equities, so I can just name it equities. And I have to give additional information so that I will know which year I'm working on, which is 2023 and 2022. So I hit enter. Since I'm done fine-tuning all of the tables that I'm going to be importing. What I'll just do next is to say close and load on this part. So I hit close and load. This will import all of the data that I'm going to be using in my analysis. So as you can see, we have the query connection loading on this right side of the screen, and we have here it says extracting data, and automatically it's populating those worksheets for us, which we have the equities, the liabilities and the assets. So once this is completed, the data will appear automatically, giving us our total equity, liabilities and assets from the financial statement that we have, without having to add code any of the data. As we can see, the data are preloaded already, so this saves us the stress of having to input all of this data ourselves, and prevented us from having human error. So our equities here is complete. Likewise our liabilities here, we have the total liabilities, and also we have the total assets here. Likewise we have our income statement here, which contain all of those information from our income statement. So the best practice is not to tamper with any of this original data. What we can just do is to open a new worksheet, and import all of those data that we need for financial ratio analysis. So those data, I will just have to copy and paste them to this place so that we can work with them directly. These are the data that we are going to be using for our ratio analysis. The data are what we have here, and they are not very much because they are the key performance index that we are going to be using. So for the revenue, that's for our income statement, we have the revenue and cost of goods sold, we have the gross profit, operating expenses, likewise the income, that is before income tax, then we have the provision for income tax, then we also have the net income. Likewise, we have the data that we are going to be using from the balance sheet, which include the assets, liability, and the equity that we have here. So now to populate this data, what we just have to do, the data in our work actually contain data from 2022 and 2023. So what we'll just do, we are going to follow the order as what we have here. So the order include 2023 first and 2022 second, because we are going to do autofill for some of those data. So for the revenue, we have data that we're going to be using from 2023 at first, then the other one from 2022. So I just input that there manually, and I can just bold whatever I'm going to be having on this line so that it will stand out as an header. Then for the revenue for my 2022, what I'll just do, instead of having to add code by going into my income statement and copying the data for my revenue, which is the total net sales, I can just do Ctrl C. That will be hard coding, and it's not a very good practice. So what I'll just do is to input it as formula. So I'll just say it is equal to, then I go to my income statement, I just click on that data that I need there, which automatically populates this. So the meaning of this is actually saying from income statement 2023-2022 worksheets, cell B4. So this is cell B4. Then I hit enter, and as you can see, the data that is required here automatically populates. So what I can just do is to drag and fill for this 2022, and it automatically update because I'm having 117, which is actually the value that I have for my 2022 year. So since this is what I have as 2022 value, it means by the time I fill, what happened is that it's still in the same income statement worksheet, but here B4. Likewise, if I move to the next cell, it says C4, which is what I have here. My C4 is this second part. So highlighting and dragging it to whichever direction actually automatically fill the data. Now we are going to do that the same process for the cost of goods sold. So to do that, I say it is equal to, I go to my income statement, cost of sales. I have the total cost of sales here, so I just click on this and it automatically fill that. I hit enter, and as you can see, the data is populated. Likewise, I'm going to do the same for the gross profit. I go here and I say gross profit is the same as gross margin, so I just hit on this cell and I hit enter. Then the operating expenses, which we have this, so I go there, I say my operating expenses is this, so I hit enter. Then it says income, which is earning before income tax. I say okay is equal to, then income, that's after operating income, other income, then we have income before provision for income tax. So this is the data we are using. I hit enter also. Then we have provision for income tax. So this is the income tax that is being paid. So we hit equal to, then we say provision for income tax. We have the value here. I hit enter. Then the net income also, I say is equal to, I go back to my income statement. Net income is the same as net profit, so I hit enter also, and automatically here I have all the data that I need for my income statement analysis. So what I'll just do is highlight all of this, then I drag to the right so that it will automatically fill for the next year. Then I can just convert this to currency, that is if I care to do so. That is I'm trying to do something relating to accounting, so I can just do that there, and my data is being formatted and it appear appropriately. So I'll do the same thing to the balance sheet, which I'm going to skip the process due to what we actually have to do. So what I'll just do first is to get my assets close to this part. So now that my asset is close to what I have here, like my sheet, so let me just rename this sheet. I will say it is a financial ratio data analysis data. So I rename the file that way so that I will know what I'm actually working on. Then the data that I want to obtain now are from my assets. So I'll just, okay, the first item is the cash, but before I proceed I would like to name it. I will say this one is for year 2023, likewise this is for year 2022. So I go back to my original cell here, then I say for cash it is equal to, then I go to the assets and I see cash and cash equivalents, then I hit enter. Account receivables, the same process. Account receivables, this is the value here, I hit enter. Inventory is the same process, so it can be found in my assets table. Inventory, the value of my inventory is this, so I hit enter. Then the total current assets, I don't have to do sum of this because it will actually give me error if there are some other assets that are not needed here. So I will obtain that information also from the statement of financial position that we have from our assets table. So I will say it is equal to, then I come down here, I say total current assets. This is the data here, I hit enter. So I am done with current assets. Then I just need the absolute value for my fixed assets here. So the same thing, I will say is equal to, then I say okay, total non-current assets, which is the fixed asset, I hit enter. And what I just need is total assets, which is current assets and fixed assets together. I still don't have to do any hard coding. I come back here and obtain the original information from the information that I upload from this. So what I can just do is to automatically fill this by dragging it for the year 2022. So this is automatically filled, and I don't have to do any other manipulation. So the next is to work on the liabilities and equity that we have. So I will skip this process so that we won't waste much time in that, and I'll obtain the data. Then we can now look into our analysis later on. After automatically filling those data, I can just make all of this row bold again. Then I convert this, since I'm working with accounting data, I just select accounting here, and the data is formatted in form of currency. So these are the data that I actually need for my analysis, and I don't actually do anything like hard coding throughout the data. So this actually prevents human error that could possibly happen, and it can also ensure that if there is need for any change from the original data set, then the change will reflect here without having to do the same thing more than once. So now let's go straight into our analysis. To do that, we are going to be looking at some of these analysis that we have here. So the analysis that we are going to be looking at, we are going to be looking at the liquidity ratio analysis, the profitability ratios. We are going to be looking at the leverage or solvency ratio, and also we are going to be looking at the market value ratio, because these are the ratios that are very important to us as financial analysts in making any business decision. So going back to the top, we have the formula for liquidity ratios. It says the formula is current asset divided by current liabilities. Likewise, for the quick ratio, this is the case where the current assets, we just want to test if after removing inventory the current assets will still be able to take care of the current liabilities. Then the gross profit margin is actually checking for the gross profit over the revenue to know the percentage of direct cost. And as we also have here, we have the net profit over revenue. Then return on assets, here we actually want to know how much are we making on our assets, to be able to make decision on whether to employ our assets into other productive activity that could generate more income. So this value here will give us what our assets is actually earning in return. Then we also have return on equity, which is the net income divided by shareholders equity. So here we also have the debt to equity ratio. Here we are trying to check the leverage at which a particular company has. Let's say for instance, if we have an investment opportunity that promises 20% of the investment. Let's say for instance it is a loan, and it means we are getting back our original money, which is the principal, together with the interest of 20%. So if I should give out 100 naira as part of the loan, then at the end of the contract what I'll actually earn is 120. But if I should get an opportunity for someone to support my financing, use let's say by 100 naira or so, then I have 200 naira to invest, which will earn 240. So by returning the 100 naira to the original person that I borrowed from to support my investment, I remove my additional principal, which is the second 100 naira. Then what I'll be left with is the 40 naira, which means when we have support, that is the leverage that we have, we actually make more. So the leverage a company has can give the company better edge in any investment. And also it is an index for us to determine how to balance this, because too much leverage is not actually favorable on the organization that we are working on. So these are things that we can use in getting how solvent a company is or an investment is. Likewise, we have the interest coverage ratio, which we are going to be looking at earnings before income tax divided by interest expenses. These interest expenses are those expenses, or I will call it them liabilities, that interest are accrued on them. That it means liabilities at which we pay interest on. So interest expenses also, we can see it in this way. If a warehouse owner or a store owner should get credit facility from its customer or a supplier, that is called credit, and the amount will remain the same as the credit is given based on trust. So this type of credit do not earn any interest. But if that same person, the store owner, go to a bank to obtain loan, the store owner will possibly pay percentage of interest on the loan. So that percentage of interest is what we know as interest expense. So it means not all liability of a company are actually accruable to interest, but some of those that earn interest are what we are going to consider in our interest expenses here. So we are not going to be focusing on the efficiency ratio here. We are going to dash straight into the market value ratio, because we actually want to know the market value for a company before we go into any investment with them. So the first that we have here is the earning per share, and we have the ratio or the formula to be the net income divided by the number of shares outstanding. And we have price to earning ratio also, which we are going to be working with market price per share divided by the earning per share to know the difference or the variance or how expensive a company's share or stock is. So without wasting much time, let's dash straight into the analysis that we can actually work with. So what we'll just look at now is the part of ratio analysis, and we have some of these ratios written out here. We have two ratios under the liquidity ratio, then we have four ratios under the profitability ratios, then we have two other ratios under the leverage ratio. Likewise, we have two ratios under the market value ratio. So to work with that, the liquidity ratio, we have current ratio, which the formula already says it is equal to the current assets divided by current liability based on the formula. So what we'll just do is to say, okay, it is equal to, because we don't need anything like hard coding, so it is equal to the current ratio. The data can be gotten from the balance sheet data here. So what I'll just say is the current assets, and we have our total current assets here. So it says it is divided by current liability. So our short total current liability is what we have here. So I just hit enter and the data is automatically updated here. So I can also apply the same drag and fill shortcut to automatically fill for year 2022, and as you can see here I have cell B16 B21. It will change to C16 C21, which is still holding the value of the total current assets and the total current liability. So that is being said, then we look at the quick ratio, which the formula says it is current asset minus inventory first divided by current liability. So we have to put that in the bracket. So I'll just go back to my formula. I will say it is equal to, then I say what is the current asset, which is what I have here, total current asset. Then I say it is minus the um, inventory value, but these two values are going to be in brackets, so I come back up here and I put them in brackets. So after that I say okay, the value is going to be divided by what I have as my total current liability. So I hit on this and I hit enter, and the value there is automatically updated. So here it actually means that the company can take care of this current ratio more than once, where it's 1.07, but the quick ratio, after eliminating the inventory, the company can still take care of its current liability more than once also. So what I'll just do is to drag and fill for year 2022. So now we move to the next, which is profitability ratio. Most of this data will be gotten from the income statement, because that's where we have our item for profit. So here we are going to be having the gross profit margin, which is the gross profit divided by revenue based on the formula. So I say it is equal to, then I move up to where I have my gross profit, then the gross profit divided by revenue. My revenue is what I have at the top here. So this is the formula for that. I hit enter and my data is automatically populated. Likewise, if I should work for the net profit, the net profit here that I have the net profit margin, which I have net profit divided by revenue. So it's just like the same thing. I'll just say it is equal to, you should watch this formula by where we have all our formulas being displayed. So I said it is equal to net profit, which is net income, then still divided by our revenue for the year. So I hit enter and it automatically updates. Then the other one that I have here is return on assets, ROA. Return on assets says the net profit divided by total assets. So I can just get that done by say okay, my net profit, I say starting with, is equal to, I go back up, my net profit, then I say it is divided by my total assets. Total assets, I can get that from here. This is my total assets, and I hit enter. So this is the return on asset. It means on our total assets we earn 10% as return for the asset. Likewise, for the equity, the formula simply says it is the same as saying net income divided by shareholders equity. So I go back and I say it is equal to net income. Net income can be gotten from income statement value. So I say net income, then divided by shareholders equity. We have the shareholders equity here, and I hit enter. So that data has been updated. So what I can just do is to highlight these 4 cells, then drag to fill them for year 2022. So after that is been done, I move to the other part of the ratio. The next we can look at now is the leverage ratio. So for this leverage ratio, we have the formula, and part of those ratio we have the debt to equity ratio, and the formula to do that is total debt divided by total equity. This is the formula, just as we have here, debt to equity ratio. We have the total debt divided by the total equity. So this will support our decision. So how do we get the total debt? We do the same thing. We say it is equal to, then we go back up. Total debt in this case is the total liability. So the total liability that we are having here, we are going to get it from our balance sheet item here, and the total liability value here is this. So this divided by the total equity, which is shareholders equity, and I hit enter, it gives me the debt to equity ratio. Likewise, if I'm to get the interest coverage ratio, just like as I explained earlier, when you're working with interest coverage ratio, we have the formula that says EBIT, which stands for earnings before interest, income tax, then divided by interest expenses. This interest expenses also represents those liabilities that interest are accruable to them. I explained that from the beginning of this lecture. So what we're going to do now is to get the value of our earnings before income tax divided by, so what I'll just do is I'll say it is equal to, then I move up, my earnings before income tax is this, so I hit this, then I say it is divided by, then um it says interest expenses. It means those liabilities that interest are accruable on them. So what I'll just do is to find those liabilities from our balance sheet item here, and as I can see, I have both the short-term debt and the long-term debt here. I have their values here. So these debt are the parts in our liability that actually earn interest. So what I'll just do, since I have two components, I'll put them in a bracket. So I'll just say open brackets, then I take the first one, because I'm going to be summing them up, then I say this plus long-term debt also, then I close that bracket, and as you can see, my formula bar here, I have the B7, which is the income before income tax, yes, then short-term debt, which is B20, and long-term debt, which is B22. So I hit enter there, and my value there is automatically updated. So I highlight and I drag for the previous year, which is year 2022. What it will just do, just like we have seen before, here we are referencing cell B23 and B24. So if I should move my cursor to this cell, it says C23, C24, which is the same as the data that we are using. So okay, so let's move to the next part, which is market value ratio. This market value ratio, the formula actually said to be the net income divided by the number of shares outstanding. So number of shares outstanding, normally or usually we are supposed to get it from our statement of financial position, yes. So let's check to see if we actually have the number of shares outstanding. So going back to, okay, I have my equity here, so let's see what we have there. So in this information, we have the shareholders equity, then we have the common stock and additional paid in capital. Okay, this is looking interesting. So what I'll just do is to wrap this so that all the text can actually appear to the screen now. So I have common stock and additional paid in capital at this at par value, and these shares are authorized. That is 50,400,000 shares are authorized, whereas 15,460 and 15,550 are shares issued and outstanding respectively. But the formula here says the number of shares outstanding, so which means this later value, which is the 15,550, is the outstanding share. So what I'll just do is to copy that value out, because I'm going to be needing it, since I don't have it as a value in my table here, but it's provided here as additional information. So what I'll just do is copy that value out, then go back to my financial ratio analysis data. I can just come up here and place it here and say okay, Ctrl V, then I call it shares outstanding. Yes, I can just broaden it a bit so that we know what we're having there, as not to be in the original data from the statement of financial position. So I say we call it shares outstanding. So that being said, and shares outstanding usually will be the same across this period, which is still 15,550. So that's value we have there. Then we say earning per share, which is the same as the net income divided by number of shares outstanding. So I will just do that. Our net income for this year is 33 this, so any per share, I'll say it is equal to, then I move up to get my net income value, then I say this divided by what I have as my share outstanding for that period. So I hit enter, and as you can see, the value here is actually 0.0, but let's increase the decimal place here to see if we are going to actually have something. So yes, we have something here which is very interesting, and I spread this across these two cells. So we have the value of earning per share. And one thing you should know is that going back to our statement of financial position, or yes, the information that we have here, it says all of these data are entered in millions except number of shares, which are reflected in thousands, and per share amount. So these are reflected in thousand. Let's now scroll down here to see the earning per share that we have from our sheet here, if it is provided. So here we have any per share which is 2.19, and here we have 1.89. So let's go back. Since it says the value there is represented in thousand, so I can just say, okay, this value, then I say multiply by 1000, then let's see what happens. So it actually represents the real value, which is 2.18. that is what we have here actually. So it actually signifies that our calculation is correct, which we have our earning per share. So now this price to earning ratio is something we can actually look into by looking at the formula. We have the market price per share divided by earning per share. So the market price per share actually varies based on the time that the analysis is being made, and the result of price to earning ratio will give whether the price of the particular stock is expensive or not. So that being said, we have actually covered most part of this analysis which we are supposed to based on the requirements. That is financial ratio analysis that are very important, and the next is for us to look into the growth analysis. Then we look at scenario analysis and also variance analysis. So to compute for the growth analysis, what we just have to do is to compare the value that we have for year 2022 against that of year 2023, using 2022 as the base period. So the formula is very simple and straightforward. To do that, what we just have here should be the growth. Yes, we want to see how far we perform. So the growth and the data that will be entered there will surely be entered in percentage. So I represent that in percentage. Now, to get the growth, what we'll just do is to say it is equal to, then open brackets, because I'm going to actually be comparing these two data against each other. I have year 2023 as the value before year 2022, then I close the bracket and I said divided by year 2022, which serve as our base period. So by hitting enter, it gives me the growth rate, that is how much do we perform in our revenue. And as you can see the figure, actually we have an increase from 117 to 119. So that signifies a growth from this period to this other period. So since we have 2% here, and our formula is basically using B3 minus C3, it means this cell minus this cell divided by this cell again. So it's the same that will be applicable to the rest of the cell in this table. If I should drag and drop this, so we have all of this automatically filled, since the cell will just continue to move as they are using relative referencing. So that being said, we are done with the growth analysis for the income statement. Let's do the same to the balance sheet item here. So we say this is also growth. So the formula again is going to be, it is equal to, open bracket, I have this as my first value, then minus the base value, then divided by the base value again. and I hit enter. So the growth rate here is already presented, and I convert it to percentage. And as you can see, it means the cash significantly grow from 29,000 to 40,000. So what I'll just do is to drag and fill this up to this point, yes, which is our total liability and equity. So all right, that being said, as you can see, there's no much variance in our total current assets and total fixed asset. There's not much variance there, but we have variance in the accounts payable, short term and long term debt, and so on and so forth. So we are actually done with the growth analysis. This is actually trying to check for the trend of one period over another. So for our revenue, we actually see a significant growth of 2%. Likewise, for the gross profit, there's a growth of 9%, and cost of goods sold, which we have a fall in the value. As we can see, 2022 is greater than that of 2023, which signifies a fall in cost of goods. So it means we actually employ a particular strategy to reduce the cost or expenditure attached to the revenue, and that contributes to the significant growth in the gross profit. Also, we have operating expenses which increased by 1%, and income before income tax also increased by 13%, and that also led to significant increase in our net income. So that is how we can actually interpret some of those values based on our growth analysis. So the next thing to do is to actually predict some particular value using the scenario analysis. Since we have data from previous year, we can now estimate what we will actually be having in a future year, and to estimate we call that prediction. So we can forecast what will actually happen in the in a future date. So what I'll just do is I'll call this forecast, because I want to do some forecasting. But before I proceed, I would like to explain some of those scenarios that we have in our financial analysis. For those scenarios, we have three scenarios, which we have the first to be being optimistic, then we have the base case, which is the normal, and then we have the pessimistic. So being optimistic means positive, so we can assume that normally the company should see a growth of about 5%. Yes, let's leave it at 5%. Then if we are being optimistic, that's if we perform very well, then we should see a growth about 10%. Then if we are being pessimistic, which signifies the worst case scenario, then we should see a growth of let's say for instance 2%. This percentage will actually change based on the industry that the company naturally finds itself, as there are some industry that are rapidly growing, so the percentage here may vary based on the industry. So these are the scenarios that we may come across, which are being optimistic, the normal case, and being pessimistic. So this scenario, we can actually use it to make our forecast, but for the essence of this video, I will only be making use of the base period. That is the base scenario, which is the normal expectation. So we are going to be forecasting for the following year, which is going to be year 2024, since we have 2023. So for year 2024, I will say okay, I want to forecast for year 2024 using 10%. So I will just say at 10%, then I hit enter. So that we are forecasting using 10%, which is the base case. So here the first value is going to be equal to 2023, which is going to be multiplied by the original 2023 value represented by 1, and we add the rate at which we are going to be increasing our value on. So we have 1 plus the base case, which is 5%. So that will give us 1.05, then multiply by the original value that we have for year 2023. So that being said, I hit enter, and yes, my formula is automatically updated, and as you can see, it actually increased this value by 5%. That is what we have here. So I would like to follow the same pattern by dragging and dropping this, but I will come across some error. As you can see here, we have the same value on this cell and on this cell here downward, and yes, together with this cell. So the changes only stop on this second row. So what must have been the issue? As you can see, the formula here, we have b4, which is yes, the correct value that's supposed to be. We have b4, then we also have 1 plus L4, and the L4 is actually this 2%, but we don't need this 2%. I want the increase should remain at 5%. So what can I do to take effect of that? So what I can just do is to lock this 5% from the first part here, which is the L3. I can just lock the L3 colon so that it won't move using the F4 key. Then I hit on enter. Nothing changes, but I have to fill again, and as you can see, the value changes respectively, which signifies an increase from this column to the other column. So we forecasted using 5%. This is not 10. Forecasted using 5% in our data, and we are going to do the same for the balance sheet items. For this balance sheet item, we actually do the same thing by saying it is equal to the value for year 2023 multiplied by open bracket 1 plus the rate again, which is the base case. Then I just hit this, but as we have all seen previously, we have to lock this colon. Then I close the bracket, so I hit enter, and the value is automatically updated. So what I can just do here is to drag and fill, and it will automatically fill my data for me here, and yeah, that signifies an increase. So what this is actually giving is that using 5%, I've been able to forecast based on the normal prediction that we have, probably through the trend analysis that we have. If we have been seeing significant growth around 5%, then we can use it in predicting the future outcome. So we are using 5% scenario here, and we use that to forecast what will happen in the future. So let's say, for instance, we actually obtain the value of year 2024, that's after year 2024. So we are going to be having the actual value, which is going to be here, so that we can actually do our variance analysis, which is the difference between the forecasted value and the actual value that we obtain. So it's going to be 2024 original data. So the value will be entered manually. So I automatically populate this data as our actual value for year 2024, assuming we are now in year 2024. So this data have been populated already. So this is in error, and okay, so that is settled. Now what we want to do now is to check the variance, that is how much do we deviate from what we originally planned to have. This serves as a budget that we can work with by forecasting what we predicted to happen in the future. But here we have what actually happened. Now if we want anything done, what we just do is to check the variance. How much do we deviate from the planned or predicted value, to see if we are actually doing well or not. So to perform variance analysis, the variance analysis, what we just do is the same that we have been doing by comparing these two values. And to compare two values, we say one should be the base value. So the base value is going to be the forecasted value. So what we're going to be having here is going to be actual then subtracting the predicted value, and dividing it by the predicted value. But to get this done, actually we have to put it in brackets just based on the rule of BODMAS. Then I hit enter. So here it actually returned my results to me, but I don't need it to be in this form. I need it to be in percentage, so I can just increase this. So what I can just do is to drag and fill, since the data that I need are on each line respectively. And as you can see, we have negative value, likewise we have positive values. So I can do the same thing on this side by calling this variance analysis also. So hitting enter, I go back to this, I do the same thing by saying it is equal to, but this time I have to start with opening bracket, this minus this the actual, subtracting the forecasted value, then dividing the forecasted value as the base value. So I hit enter, then I format this to be in the form that I want and convert it to percentage. So what I can just do again is to drag and drop this. So after dragging and dropping this, it automatically populates what I have here. Oh, this is a value that is entered in error, so I can just eliminate the last value there because of the percentage there is actually very great. So having this done, we can now make interpretation of our variance analysis. Here we have the revenue value, and revenue value, what we forecasted was 125 using 5%, and what we actually got was 120, which means we are not performing based on the normal market trend. So if any decision is going to be made, we have to actually look back into our sales point to identify those factors that are not working as expected, so that corrective measures can be taken. Likewise, here we have our cost of goods sold. Cost of goods sold, here we have yeah, normally it's an expenses which is supposed to be controlled, yes, but what we have as our forecasted value and what we have as our actual value are very close. So since the difference here is minute, it actually don't have any significant value on our analysis. It means we are still on track. So the same interpretation goes for the gross profit. Here we are expected to make about 57,000, but we made 56,000, which signifies a fall. So this fall is actually attributed to the fall in our revenue here, so it has influence on this, and that influence actually will affect all of our data. And let's say for instance this could be entered in error. Let's say it is close to the figure, let's say 49. Then yes, we can actually work with this, expecting an increase, or we reduce it a bit. Say it is 39, 38. So we can have this actual value is actually entered manually. We don't actually obtain this from any resource online. We just use this so that we can get our variance analysis, and the interpretation actually matters. If it is a negative value such as expenses, just like we have as our cost of goods sold, then we are expecting a fall negative. Likewise, if it is positive that we get in a negative value, it means the expenses or the spending has actually shoot up, increasing. So that is it. That is that about that. The same thing goes for our assets and liabilities. So to wrap everything up, in summary, what we actually look at, we obtain all of this value by referencing them from the original financial statements that we uploaded using the file. Then we perform our ratio analysis based on the formulas that we have from this page. Yes, based on the formula that we have from this page. Then also we looked into the growth analysis, which follows the same pattern with the variance analysis. So the growth analysis actually check for the trend, of our report. Then we have the forecasted value using the scenario analysis. So here we can just have data validation here to validate for this whichever scenario we are using, but I write this out to for explanatory purpose, so we can take effect of data validation to edit this, so that whenever you click on the scenario you want, then you actually see the results that will appear here, and how that will change, how that affect our actual value, the variance between the actual and forecasted value. So that being said, you can also obtain the information that we use, that is the financial statement that we use, from online resources by going straight to Apple's company's page and downloading the financial statements there. So thank you and you are welcome. If there's any question that you have for me, you can drop it in the comment section.